back, better investors, to another episode here on the BI Academy channel. And today we're going to be talking about the Bitcoin halving and what exactly does that mean. So at the time of this recording, there's 32 days left, and that means that in 32 days, the hash rate of Bitcoin will be cut in half, and that is going to cause the supply of Bitcoin to come out at a slower rate versus the demand for Bitcoin is probably going to increase and keep going up, especially now that we have ETFs, exchange traded funds, which means pension plans, 401ks, and the general public can get in on Bitcoin. For us to better understand the Bitcoin halving, let's take a look at what Bitcoin is and what is it meant to do. So Bitcoin is a decentralized cryptocurrency. It's a peer-to-peer online currency, meaning that all transactions happen directly between equal independent network and participants who need no intermediaries for them to be able to facilitate the transaction. So Bitcoin was created to allow online payments sent directly from one party to another without going through a financial institution. As you can imagine, how do banks get paid? How do a lot of these credit card companies and different service providers get paid? They get paid through the transaction itself. So if you can remove some of the people in between yourself and that buyer or that seller, depending on the transaction, you have less fees, and therefore now you have less expenses as a business or an individual. Also, too, Bitcoin is anonymous to an extent whereby the transactions can be tracked on the blockchain and traced back to an address, but it does not tie someone or their identity to that transaction. So it does not put our name and who we are a part of that transaction, which gives us protection over our identity as well as allowing us to operate without necessarily having as much government oversight. And that's what it comes down to. It comes back to the government oversight. Because governments have their own currency, which we can call government's money, dollar bills, cash, and even the digital version of cash, that can be manipulated, and that manipulation we would call and refer to that as inflation. Okay, so Bitcoin doesn't have inflation because it has a limited supply of 21 million Bitcoin. And the limited supply, while staying the same, also goes down in terms of how much of it is available and how much of it is becoming available. So if less Bitcoin is available and also how Bitcoin is being produced is slowing down, it makes it ever more scarce while individuals are also looking to buy more of it. That's only if people want to buy more of it. And if people do, it's going to cause the price of Bitcoin to significantly increase every time this hash rate is decreased. Hence the Bitcoin halving. After seeing Bitcoin go up and reach an all-time high, we saw that it started to fall. And this is no surprise. Think about anything that you already know and love and you buy and purchase it on a regular basis. Food, water, gas, clothes, shoes, all these things, you rather buy them at a lower price than you would a higher price. So as Bitcoin goes up, less and less people will be able to afford it, and what that means is that less people will be willing to buy into it. Therefore, you're going to need more people to buy it for the price to continue to go up, or else the price has to start going back down. Well, it looks like Bitcoin might have those extra buyers. So it says here the Bitcoin price may be down, but demand isn't slowing from crypto fund investors. These funds allocate the money of smaller investors. So we see here a record 2.9 billion flowed into crypto funds, says CoinShares, the vast majority back in Bitcoin ETFs. While a lot of wealth is changing hands and a lot of money will be made, it's important to understand that when the US yield has dropped, it has a 100% chance of a recession or even a depression, so a decline inside the economy, and then we see asset prices sell off. So while there will be a run up from this, ultimately we could see the stock market crash, and if there's pressure on stocks, there's also going to be pressure on other risk assets, cryptocurrency, aka digital assets, being some of those as well. To finish off this video, I want to look at what was being said about Bitcoin and crypto before versus what's going on and being said about it now. Better investments equals a better future, and I'll see you guys inside the next video.
You've mentioned that Bitcoin is an excellent store of value. If that's the case, why haven't we seen prices rally over the last few months during the quarantine?
Yeah, that is true. The community is still very small, right? And it is a very good store of value, but it's very volatile. And we went through 4 waves of adoption. It started with the anarchists, and then the libertarians, and then the speculators, and now we're waiting for this institutional wave of adoption. Part of it we've seen with like Paul Tudor Jones, for example, joining the party, and Fidelity and other people. But the mass adoption, the hundreds of millions of people or billions of people who, for example, are using VoIP and are not using MOIP, are not using money over IP, they have not joined yet, right? Because we have not made it easy for them to use that for store of value or to use that for payments. So we're still missing stuff in the piping. We got to finish the technology.
We're perhaps negative on Bitcoin prior to doing the homework. Andrew, it's a one-way ticket towards Bitcoin if you actually do the homework to fully understand the asset. But specifically, if you look at the last 14 years, you usually get a quadruple after a halving. And so Bitcoin right now is trading 57,000. I'm not sure where it'll be on or about April 20th when the halving actually takes place. But let's say it's at 50,000. That would imply over 18 months from the halving, a $200,000 Bitcoin price. So the price is going up primarily because there's not a lot of supply out there. And yet you're seeing these Bitcoin ETFs coming into the marketplace with 12 to 14 times what's available in terms of what the network is producing every single day. And so that's why you're seeing this price squeeze. And of course, you do have people that don't believe in Bitcoin that are short Bitcoin. And so they're getting wrecked right now. And I think that's the combination of why you're seeing such great price appreciation.
I dreamed the struggle was over, but dream never made it real.